Analyzing the markets becomes a much easier process knowing what each individual candlestick signal represents. As we can see, once we had what we call our McMuffin pattern, which is a morning star signal followed by a doji sandwich, or a morning sandwich, we had a very strong uptrend. We could see when it hit a resistance level, there was another doji sandwich. But we also could see in this whole uptrend, they could never close it back below the T-line. And when they came toward the T-line, it was done so with very indecisive trading. The decisive trading was when they would bounce up off the T-line. Once it broke through the major resistance level of the 200-day moving average, pullback days were indecisive compared to the bullish days. These little doji type days on a pullback basically tell you that investor sentiment is just kind of indecisive here, profit taking. Today we saw another indecisive day as it pulled back, not changing any of the investor sentiment. So very logically, if you add everything that we know about candlestick analysis, that as long as the pullbacks are indecisive and we're coming from very strong bullish signals and we're staying above the T-line, we know that we're basically in an uptrend until we see a strong candlestick reversal signal. That same analysis applied to the NASDAQ. Started its uptrend with a big left-right combo followed by a gap up. Did our typical bobble. When it hit the 50, it resisted, but it pulled back with very indecisive trading. Doji, shooting star, spinning top, and the one element that we always keep in mind is that they weren't able to close back below the T-line. As long as it stays above the T-line, it's in an uptrend. Once it got back up to the resistance level, it gapped through, telling us there was not going to be any resistance at the 200-day moving average. The uptrend remains in progress until there's a candlestick sell signal and a close below the T-line. We can also use that analysis on individual stock charts. Big bullish engulfing signal in BABA. Came up through the 50, came back, used the 50 as support. Came back down and looked like it was coming back down to the 50-day moving average to test it again, but the bullish harami right on the T-line told us the T-line was holding, a J-hook pattern was in progress. What was our next target? Likely the 200-day moving average, because if wave 1 and wave 3 are the same, we should be heading to the 200-day moving average, and at that point, there was no confirmed sell signal. Today's trading opened lower, came all the way down, used the 200-day moving average as resist or support, and came back up, basically telling us they weren't selling this off. Candlestick information allows investors to see exactly what investor sentiment is at any particular time in a trend, such as LinkedIn this afternoon. They were still buying going into the close, and it's gapped up into the up big after their earnings. You got to figure if they are still buying going into the close, somebody a lot smarter than us little individual investors that don't have the research capabilities have to see what the biggies are doing, and the charts tell you exactly what they're doing. Same scenario as we saw in Starbucks, where they were getting toppy and they were still kind of selling, not trading up today, going into the earnings, and they've gapped it down after earnings. So using the candlestick signals and patterns allows an investor to have a lot more timely trades right at the appropriate times. That'll be it. We'll see you in the chat rooms.